much for joining us on the program. This is Capital Markets, and I'm Temple Ashaju. Let's touch on a couple of news items before our focus of the day. The Nigerian Stock Exchange's domestic and foreign portfolio investment report shows that total transactions at the nation's bourse increased by 63.58% to 242.91 billion naira in March 2020. When compared to the same month last year, total transactions increased by 120.60% in March 2020 from 110.11 billion naira. According to the reports, total domestic transactions increased by 71.97% to 132.69 billion naira in March, while total foreign portfolio transactions increased by 54.50% to 110.22 billion naira. The value of domestic transactions executed by institutional investors outperformed retail investors by 10% in the period under review. And food and beverages giant Nestle PLC has reported a flat top line for the first quarter of the year as the NSE main board listed company considers the coronavirus outbreak in Nigeria as non-adjusting events owing to its business continuity plans. Bottom line for March the 31st, 2020 period is also negative as total equity settled 10% lower for the period. And of course, Nestle explores the use of local raw materials in its production processes and has successfully introduced the use of locally produced items such as soybeans, maize, cocoa, and of course, sorghum in a number of its products. A note to investors in the bellwether's results says it's too early to quantify the overall impact of COVID-19 on its financial position, results of operations, and of course, cash flows. Trading on Nestle shares closed flat on Friday at 1,000 naira ahead of its dividends qualification date of May the 15th, 2020. Now, with Nigeria's 850 billion naira earlier externalized debts now revised for local flotation, the capacity of the domestic capital markets to absorb the government's debts comes to the fore. There are several questions arising from the concern, one of which is how the federal government will be able to manage the attendant interest rate, the crowding out effect on corporate bonds in the capital market, and perhaps the expectation of a new bond auction calendar from the Debt Management Office, that's the DMO, and that's for the rest of the year. Well, the Director General of the Commission, that's the DMO, Ms. Patience Oniha, joins us now and to answer some of these questions and, of course, other matters arising. Thank you so much for joining us this evening, ma'am.
Thank you very much. It's my pleasure.
Great. So we had 745 billion naira domesticated debt before now until we had to revise and do and localize the 850 billion naira that we got approval from at the National Assembly. But what exactly is the capacity of the domestic capital market to be able to raise these funds for the federal government?
Okay, I think it's useful at this point to sort of provide an update, to the public on what's happening with borrowing. As you're aware, the 2020 budget and the medium-term expenditure framework for 2020 to 2022 is being revised. So the total new domestic borrowing in that in the 2020 budget, which is a draft, still a draft until it is approved by the Federal Executive Council and the National Assembly, is about 2.644 trillion naira. Okay, so that includes the 850 billion that is being localized. And if we take note of the fact that we have already raised 570 billion of that, it really means that for the rest of the year from May to December, if the necessary approvals are secured, the new domestic borrowing would be about 2 trillion naira, 2.07 trillion naira. So it's actually higher than 850. Your second question in terms of can the market absorb it? You made a valid point there. One of the reasons we were externalizing our borrowing, some part of our borrowings this past few years, was, like we said, to create space for the local market. But as it is, things have changed in the international markets, not just for Nigeria, but for any country that doesn't really have a superior rating. So where will the money come from the domestic market? We have a vibrant domestic market, and one of the things we have been able to achieve collectively is to have a large group of investors. So there are the pension funds, which are the obvious ones, but there are also fund and asset managers, as well as the insurance companies. The annuity funds have come on very strongly, and then some of the government sector that have to invest in government securities. So let's just say if you look at our subscriptions, the investor base is quite diverse, so we're not relying only on pension funds. But let me quickly add that apart from the fact that there are these several sources and that pension funds keep growing by definition, there are automobiles of about 7.34 trillion naira that would mature this year. So we also expect that funds coming from that would be invested in the FGN securities that will be issued, because in terms of risk, really, they are low and they are safe. And as you know, there isn't, I guess the emphasis on automobiles has reduced a bit. So if you put all of those together, we think we'll still be able to raise the money, and there will still be money for other borrowers in the domestic market.
Given the exposure of the pension fund assets to the capital market, we know that currently there's a 51% quota that they have in the federal government bonds for now. But in terms of their capacity to be able to, bring in more holdings, do you think they have that capacity, and won't they exceed that quota of their exposure to the capital markets?
I think let's put it this way, yes, there's a ceiling on FGN securities and FGN guaranteed securities of 80%. They are not at 80% yet, so if you add all the government securities they are holding, and including OMO, actually that would be about 71% using their December figures. Again, so there's still some room to move from 72% to 80%. But we're saying because pension funds increase automatically by deductions, from employee remunerations, they will grow. But keep in mind a very important point, that the PFAs are not the only source of investment for FGN securities. We still have other fund and asset managers who sometimes take up 30 to 35% of the auctions, actually. So that sector has grown very significantly in the past 2 years. Again, the insurance sector and the related business of annuity has come on very strongly, which informed, why we issued a 30-year bond last year. Then there are some other institutions as well. So the main investors are not PFAs. There are about 3-4 critical sectors that are evenly distributed. But again, remember what I said, there are automobiles maturing. So this new borrowing, the way it has turned out, then provides, a good investment outlet for those funds. About 7 trillion naira from May till December of automobiles.
The other concern that we've been hearing in the capital market community is that with all of these borrowing plans, our interest rates will have to jump. Will the DMO be ready to, meet the demands of all of the market players eventually?
I believe that it's a fair expectation to imagine that, to say rather that with increased supply, interest rates will go up. We know where the treasury bill rates have been for a while, sub 5%. So when you say, will the DMO be willing to? Usually as you know, we offer all of our securities in the market, at least the FGN bonds and treasury bills by way of auction. So we'll look at those rates and determine, whether they're acceptable. But like I say, it's a fair expectation. With increased supply, rates could go up. Inflation, of course, is another, indicator that could influence that as well. So let's just say we are open, we'll be reasonable.
Okay, so in terms of debt burden of the country, where will this take us to eventually? We know that debt burden service had improved to 32.3% in the discarded 2020 budget. Okay,
let's just put it this way. I think one of the major concerns for government, including the DMO, obviously, is the relatively high debt service to revenue ratio. Unfortunately, where we are now is where revenues have been affected very significantly by virtue of what has happened. So in the revised draft budget, I keep using the word draft because it is still subject to approval. The debt service to revenue ratio is actually about 57%. And let me quickly say that at a time like this, we shouldn't be looking at Nigeria in isolation. Many countries have had to introduce policies and measures to manage the impact of COVID-19 on the economies. I believe the U.S. just had about a $3 trillion, package approved. So borrowing by several countries, as we have seen, would have to increase to manage the downsides of COVID-19. So Nigeria is not alone in this regard.
Now, the other concern is the fact that we have some corporate bonds in the market at this point, and already players, dealers, treasurers really believe that they're being crowded out by the federal government bonds that we have in the market. Of course, with this exercise that is in the offing, things will increase. The crowding out effect of all these corporate bonds will then happen more. What are your plans to be able to give some more room for patronage to all of these corporate bonds in the market?
Temple, the DMO is very committed to the development of the domestic bond market, not just at the sovereign level, but at the private level, the corporate sector. And we are rather pleased to see the developments that have happened there from, I believe, maybe from 2016. Looking at the data, we saw that 2019 to 2020, up till April, about 550 or 560 billion had been raised by the private sector and 2 state governments. So in that regards, we have an interest in the development of the market. But we wish, if you check the various auctions of the FGN bonds, they have actually been oversubscribed. And then the treasury bill levels tells you there is liquidity in the system. If treasury bills are trading at 5%, 4%, it tells you there is liquidity. In fact, some members of the public had asked us to increase stock so that we could have real interest rates on those securities. Okay, and then you look at, if you look at our auctions from January to April, we offered 405 billion naira. And we had subscriptions of about 1.4 trillion naira. Okay, so it means there's still a lot of liquidity in the system that is available for corporate issuers. Okay, so we believe that there's liquidity in the market looking for good quality assets. And we've looked at the range of securities that have been issued by the private sector. A lot of it is commercial paper, but clearly there are bonds and they have all been successful. So we believe there's sufficient. Like I said, factor in the OMO bills that would mature about 7 trillion. So there's a lot of liquidity in the system, both for the government as well as the corporate sector.
Well, one of the things that investors will be looking at is how you will adjust eventually to the high rates that will be the attendant effects of all of this exercise. But one critical part is this: what will this funding, or what will this money, this debts actually be utilized for? Because we know as well that worker salaries, minimum wage has been hiked already, but with COVID-19 disruptions, will we see an adjustment between worker salaries review and capital spendings that have already been earmarked for the country in the budget?
Okay, again, one of the facts we have to face is that with lower revenues, a sharp drop in revenue. I mean, the budget price, the benchmark price for crude oil in the budget was $57 per barrel. Now we're talking $20 per barrel. So it means the various expenditure lines included in the budget, whether we're talking personnel costs, salaries, like you said, capital, would have to come from that lower revenue figure and then the incremental borrowing that we have had to do. Okay, so if you're talking about salaries, yes, I think government has had a very clear position on that from this administration, from 2015. One of the things the government has been able to do significantly while revising the 2020 budget is to ensure a minimal, if I may use that word, reduction in capital expenditure. Okay, so the reduction between the 2020 budget that we're running with now and the proposed 2020 budget is about 300 billion naira. So there's still a commitment to spending on capital because that's where jobs will be created from. But clearly, like I said, at this time, the government has to support various aspects of the economy. Apart from personnel costs, there are several COVID-related initiatives and activities that have to be funded, and we are not alone in that regard. We're talking about survival here, the health of the people, and all of that.
All right, thank you so much, ma'am, for sharing your thoughts. Of course, this discussion will continue shortly after this break. That's in a moment. Stay with us. Welcome back. Thank you for staying with us. This is Capital Market here on Channels Television. Well, we have been drilling down on the capacity of the Nigerian domestic markets to absorb the huge government debts that has been proposed. But that follows the review of the 2020 budget. And of course, our guest has been the Director General of the Debt Management Office, Ms. Patience Oniha. In this segment, we'll dwell on the multilateral debts that Nigeria has indicated interest in, and some of which have already been paid. The IMF rapid financing instrument of 3.4 billion naira, we understand, came in this week. But Ms. Oniha, thank you for staying with us, ma'am. Let's look at the debt rescheduling end of things. We had some debts at the Eurobond markets that we were settling before now. Now we are looking at debt rescheduling or debt forgiveness, as the case may be. How likely are we going to have this debt rescheduling, and what will be the gains for us?
I think where we are now, really, so there's a lot of talk about it, but where we are now, really, is where, as you would recall, on April 15th, during the World Bank IMF annual meetings, there was a proposal or recommendation by the Ministers of Finance and Central Bank Governors of the G20 countries to grant debt relief for bilateral creditors. So we're talking country to country now, to grant debt relief to countries that are either borrowing on pure concessional basis or are classified as least developed. So Nigeria falls in that category because we're blend status, so we can borrow concessional and non-concessional. But really, the focus of that decision is bilateral credit, okay, and it is purely on debt service from May till December, not as if you are rescheduling debt or something. That is really what is on the table. From May to December, debt service, would be deferred and resume in 2021, spread over 3 years. So what is deferred this year will be spread over 3 years. Okay, so there are talks about the multilaterals doing the same. The private creditors, meaning investors in Eurobonds, doing the same. But I should say at this time, really, we're still talking about bilateral creditors. And in terms of processing, the documentation, so this has been, how would I say, managed at the World Bank IMF level in terms of support, not that they're negotiating, because it's a country-to-country negotiation. So it's not like everybody sitting around the table and agreeing. It's still a country-to-country negotiation. So the draft paperwork and processes have just been released, and we are looking at those. So that is the situation where we are. As you would know, borrowings are governed by agreements, and the terms vary from one to the other. But as you would know, the one for the Eurobond, clearly, which is commercial, which is market as well, is different from the one that is concessional or on a bilateral basis.
Talking about our capacity or the regulations that actually guides these borrowings, one of the concerns that some analysts have raised is that first, this could actually plunge us into deeper debts. But again, the Fiscal Responsibility Act of 2007, I think Section 41, has often been quoted as something that does not support the non-concessional loans that we've taken from IMF. What do you have to say about this, man?
Okay, so I think this time you're talking about the new borrowings, the proposed new borrowings to fund the 2020 budget, to bridge the revenue gap. So those are coming from the IMF, $3.4 billion, like you said, the World Bank, $1.5 billion, and then the African Development Bank, $500 million. If you read Section 41, if I may just highlight it, Section 41 of the Fiscal Responsibility Act did say government at all levels should borrow, at low interest rates and for reasonably long tenors, to summarize it. So it then goes further. Subsection 2 of that section did say governments may borrow from the capital market, but with the approval of the National Assembly. So there is a window, it's not a contravention. So how have we been borrowing from the domestic market or through Eurobonds if there wasn't that window in the Fiscal Responsibility Act, that same section 41? Okay, so what it requires is that you need the National Assembly's approval for borrowing on commercial basis. But let me clarify, the facility from the IMF, the interest rate is concessional, it is 1%. Okay, so the aspect of it that you will say doesn't really fit the definition of concessional is the tenor, but it is concessional at 1%. I mean, we can't raise money at 1% now in the domestic or international capital market. So it's good to keep that in mind. Same thing with the World Bank. That is also going to be on a concessional basis, but approval of their board would be pressed sometime in June or July. Okay, same with the African Development Bank. For those two, discussions are still going on. But really, to keep it safe and keep it clear for the purpose of the audience, is that the Fiscal Responsibility Act does allow borrowing on commercial basis, but it must be approved by the National Assembly. And in these three cases, we are not talking about commercial borrowing. These are still concessional borrowings anyway.
So, well, the point then will be, why then did we go for the rapid financing instruments option, which comes with a 1% interest rate, as you said earlier, as opposed to the rapid credit facility program, which Ghana, for example, has taken, and it comes with 0% interest rate?
Whoever tries to look at the details, the rapid credit facility is really for low-income countries by definition, the IMF's own definition. So Nigeria has been classified, I believe, since about 2016 as a low middle-income country. So we moved up from poor to lower middle income. So let's just say that is the level where we are, the RFI. But again, it is still a loan. It is 1% and still concessional on that basis.
Talking about terms and conditions, anything you have to say about that?
Well, there are, as it is with any loan, there are terms and conditions, and I believe those were closely looked at, I should say, by both the fiscal and the monetary authorities before it was decided that this was a good offer.
All right, thank you so much, Ms. Patience Oniha, the Director General of the Debt Management Office. But let me ask you this before you go. You had actually earmarked some 65 to 165 billion naira for the Q2, second quarter of this year. Are you going to adjust that? Are you going to adjust that calendar any moment from now?
Oh, certainly. Once we receive the approvals, just remember that borrowing requires the approval of the Executive and the National Assembly. So once we have those approvals, clearly we would adjust the calendar. And when we release the calendar, because the process of converting the 850 to domestic borrowing had already started in terms of trying to get the approval of the National Assembly for the change, we actually included, a provision, a note in the circular that this could change. So I believe market is already expecting it. And we will act as we usually do, amend it once we get the approvals.
Ms. Patience Oniha, Director General of the Debt Management Office. DMO, thank you so much for making our time for us on the program this evening. We appreciate your thoughts.
No, thank you.
Right. Thank you so much, viewers, for being a part of the program too this evening. We appreciate your time. I'm Temple Ashaju. I'll see you next time. Bye for now.